Earnings season rumbles on in the US with over two-thirds of the S&P 500 having reported their fourth quarter earnings. And whilst we don't necessarily have a massively busy data docket in terms of the corporate numbers this week, we do have some pretty key names, including the world's biggest retailer in Walmart, alongside the likes of Alibaba, where we can focus on what's happening in terms of Chinese growth and the outlook going forward, and also Booking Holdings, as we try to understand what's happening in terms of this travel industry and whether they can take advantage of increased margins in the wake of that boom of inflation and higher wages. So like I said, the big ticket items really at the top here: Walmart, Alibaba, and Booking Holdings. We've got a handful of other names that may be of interest to some people out there. But by and large, this is going to be the shape of things as we go forward. Weeks will likely see a few key names. And of course, we haven't heard from NVIDIA quite yet. So that's going to be one sort of highlight at the back end of earnings season. But generally, we're not necessarily going to be seeing sort of action-packed weeks to the same degree that we have in the past. That appears to be behind us. Doesn't necessarily mean that there won't be much price action. And the examples that we're going to be looking at today are particularly interesting because markets are coming into them with a really sort of bullish sentiment around all three of the stocks. Walmart is the first of the three. And certainly, you know, this is notable. All of them are reporting on the 20th. So all of them are reporting on the Thursday. And Walmart is a great example of something that we've already seen within this earnings season. And that is the strength of the brand to an extent, which we've seen for the likes of McDonald's, the likes of Coca-Cola, but also the ability to overcome a period where people are having to adjust to potentially lower incomes when you adjust for inflation. And that's something that not all businesses have been able to do in the past. And what's crucial here also for the likes of Walmart going forward is that many businesses, let's say the dollar stores over in the US, they could have increased costs with many of their imports coming from cheaper nations like China. If the US is to impart tariffs on those goods, and if they're essentially promising to sell you that good for $1, well, those companies are likely to suffer. Where Walmart are particularly well positioned is that they will provide you with different options, some of which will be relatively affordable by nature. They're not necessarily locking themselves into a certain price point as the dollar stores are. And they have enough going on that you'll be able to go there and probably end up buying bigger ticket items as well, even if you're going there on the basis of thinking that you can do your shopping at a relatively affordable price. So they can sort of work their way up the spectrum and they can maintain margins alongside that. That's something they've done really successfully over the course of recent years. You can see it here in terms of the breakdown for the yearly metrics. So you can see 22, 23, 24 now, all expecting to grow year on year. You know, we did, of course, see some significant volatility around earnings for COVID, but certainly not to the same degree that we've seen for other businesses out there. And as we move forward, there's an expectation that we see steady growth. So 249 expected for 2024, 277, 310, 345. So the direction of travel is well defined on both the revenues and the earnings per share. In terms of the performance on a quarterly basis and whether they manage to match or beat expectations, they are very consistent. And you can see that here in terms of the surprise metric for both earnings per share and revenue. The only time out of this entire screen that they've missed was EPS on the first quarter of 2022. Every other quarter, they have beat on earnings and on revenues. So this is a company that more likely than not will post better than 65 cents when it comes to EPS, and will post better than 179.94 billion when it comes to revenues. And so a lot of it will also then come down to their expectations going forward and the outlook. And that will be particularly key because, like I said, there's a lot of uncertainty over how some of these businesses are going to be able to operate under the weight of potential tariffs. Now, of course, there's still a great degree of uncertainty around tariffs. So that means that they'll also tout that same kind of line. But it will be very interesting to look into the nuts and bolts of the company, and they can essentially break down how much they think they will or won't be impacted by these potential tariffs. Here is the chart, and you're looking here at the monthly time frame, and it's a thing of beauty. In particular, over the course of 2024, you can see we entered the year down here in your 50s, low 50s, and we ended the year at almost 100. So last year was an incredible year for this business, and we've kicked off 2025 in much the same fashion. So this is a long-term outperformer, and it's just dialed up that growth of late. Can it maintain that upward trajectory? So this is the daily time frame. We can see, let's see at the sort of top end whether we're getting a bit sort of overextended when we're looking at sort of trend line resistance. So you have that kind of argument on the top end. On the bottom end, the kind of area where you could possibly sort of pull back into is around here. So we're sort of channeling higher, and we are up at that upper threshold. If you're looking at whether we're relatively overextended, you know, Bollinger Band is one particular tool that you can utilize for that. So generally, if you see a breakout through the Bollinger Band and we return back below it, then there's a possibility it's going to be a top. If you see a breakout through the top end of the Bollinger Band and you close above it, a lot of the time price action then continues to outperform. And if you're not at the Bollinger Band quite yet, then there's a possibility you continue to move higher. Now, what we've seen here is the example once again of us pulling back. The breakout and close up above the Bollinger Band gives you the buy signal, and we've seen it time and time again. We saw it here on this pullback. We saw it here on this pullback. We saw it here on this pullback. So each time that we see a spike, and generally it comes on earnings, right? So, you know, we do this for these videos very often. It's looking back at earnings, and you know, it's one thing saying how do they perform versus expectations. So they can beat expectations every time. That's great, but markets might not necessarily take that as a good news story if it comes alongside perhaps warnings over the future direction of the company. What you want to see is a company that outperforms expectations of both earnings and revenues per share, and then you want to see a company that each time that announcement comes, price gaps higher and moves in that direction. That's exactly what this company does. You can see here, gap higher, and then we ground higher. On this occasion, gap higher, we pushed higher for a number of months. Gap higher, we pushed higher for next half a year or so, right? And then the retracement into lower Bollinger Band, we've gapped higher, and we continue to push up and up and up as we head into this earnings report. So if you look at previous occasions, you would think that this is well positioned to gap higher once again. I would say the caveat here is that often you're seeing it on a retracement into earnings, and that sort of is the breather that then gives us the power, the momentum to then push sharply higher. This time is more akin to what we saw back in November. If we see an outperformance, you're coming off the back of a period of strength anyway. That doesn't mean we can't build on that. That's exactly what did happen in back in November, beginning of December, before we pulled back. So there is a warning that generally this does retrace. It does go into sort of consolidation phases, but we're coming into an earnings for a company that generally does outperform and generally does manage to gap higher and then continue to push in that direction. So I would say, looking at previous instances of earnings from this company, you would think there's a good chance, a very good chance, that we're going to see more upside for Walmart on Thursday. Next up, let's look at Alibaba. Alibaba is a particularly interesting one at the moment because we have this whole focus on China, and part of it is down to the possibility of major tariffs between the US and China. Part of it comes down to the idea that actually maybe everyone sort of overthink it, have been overthinking it essentially, and that, you know, this 10% tariff on China isn't what people thought it might be. You know, there was talk of 100% tariffs, 50% tariffs, 10% tariff on China, and a plan to talk to Xi Jinping. You know, I would say that Donald Trump has shown himself thus far to be a little bit softer in his approach. And that is a good news story for stocks like Alibaba. Now, also, we had the story about DeepSeek, and that was followed up by Alibaba saying that we've also got an AI model and it also outperforms DeepSeek and the rest, right? So Alibaba's in the mix of this. And there's stories about Alibaba potentially teaming up with Apple. for their product out in China in terms of implementing AI there. So there's a lot that goes into this stock. And we are seeing some of the data coming out of China looking a little bit more positive. Most recently, we saw the upside surprise in terms of Chinese inflation. That gives us a signal that perhaps that sort of downturn is starting to reverse. And the policies implemented under the PBOC and the likes of the Chinese government are starting to kick in and benefit the company. So I do think with the question marks that have come about around AI in the US pretty much throughout this earnings season, that DeepSeek news has just really sort of put a dampener on the price action for many of the big tech names in the US. And we've seen Chinese markets doing really well. Alibaba's at the forefront of that. Generally, when people are investing in Chinese stocks or China related stocks, they'll either invest in something in Hong Kong. Very rarely will sort of Westerners invest in, say, the Shanghai markets and the like Shenzhen. Instead, it will likely be the Hong Kong Hang Seng index, or else US listed stocks. And Alibaba, of course, is one of those as dual listing. So it's listed in the US. And that gives people the opportunity to take a view on the direction of travel for China, the possibility that the Chinese tariffs aren't going to be as bad as thought, the possibility that China is going to be in the middle of an AI race with the US, and they seem to be very well positioned, despite the fact that they don't necessarily have the same amount of chips, or they don't appear to, top-end chips from NVIDIA and the like. And so, you know, this is a potential recovery story rather than, you know, what we saw with Walmart, where it's a story of just continued outperformance over recent years. So in terms of the earnings, let's look at how things have been shaping up. So this is the year-on-year earnings per share and revenues. So by and large, it's been a little bit mixed. You know, you would say that the peak really came in 2020. We've been moving lower in a couple of years since then. Then we started to turn higher once again last year, or well, in 2023, and then 2024, which we're wrapping up as an expectation, it comes in lower. But markets do expect this to improve in the following years. 2025, 6 and 7, all expected to grow nicely. So again, is this the bottom here for Alibaba? In terms of quarterly figures, we can see here that the 266 earnings per share expected for this is the third quarter of the financial year is pretty much exactly what we saw a year earlier. So not necessarily moving anywhere, but we kind of know that the Chinese economy has not had a great time of late. And so it's more about the sort of wider story. And certainly if we do see the numbers coming out with something that would prove that it's moving in the right direction, and if they beat expectations, then this could really feed into that narrative that we're seeing in terms of Chinese stocks at the moment. And the share price signals exactly that perfectly, right? So we are approaching, and we're trying to break through at the moment, this is the monthly time frame, this sort of inverse head and shoulders neckline, you would say, which is around about 117.8. We've also got this swing high at 121. So we've got this zone of resistance that if we break through it, then if we look at the monthly time frame, then this has been an absolutely perfect bottom. You can see the lows that we saw here in 2015 matched perfectly, and that provided the bottom. We're now sort of double up from that low, but we've got so much room to move into here for Alibaba. And if they do manage to, you know, show that this is the bottom, that they are able to push onwards and upwards from here, be it that the tariffs aren't as bad and the US-China relations actually work out to be all right, whether the AI side of the business actually starts to take off and they have a really strong AI offering, there's going to be plenty of reasons why people would look into a company like this. And the recovery appears to still be in its infancy. This is the daily time frame, so we can see here that, you know, we're sort of coming into this big retracement. Then we've popped up from that low, so very deep retracement around that 76.4 fib, and then we've rallied in pretty much a straight line since that mid-Jan low. A lot of that is going to be around the deep fake and this move into China, and certainly I think people are going to be very very aware of everything that's happening in terms of the AI space in China. And this is going to be a company that we would hope would be at the forefront of that movement from a Chinese perspective. Chinese businesses are not going away. And if we're not necessarily going to see the US spreading the love when it comes to AI technology to China, they're going to make their own. And this looks like a company that's very well positioned for that, whilst also being positioned well in terms of the Chinese consumer. So we're breaking through resistance. 121 is the next key level to watch out for. But you're looking at a company that literally, if you're looking over, say, the past month alone, we've seen the stock rising 22% in the last month. So very strong chance that we're bottoming out here. Key next level to be watching out for is 121 for Alibaba. And finally, let's look at Booking Holdings. This is, of course, a major play on the travel industry. As you can see along the top, they own the likes of Booking.com and Priceline and Kayak and Agoda. So, rental cars, you're looking at a company that you might think that you're not using Booking.com by going to one of these other websites. Well, they're all owned by the same lot, and they are some of the biggest companies in the industry. Now, you would say that travel, of course, took a major hit around COVID, and that would be true. You can see that in 2020. But travel, I would say, is probably one area where people are probably less price sensitive. You know that a trip abroad is probably going to be a relative treat, and if you're going on holiday and the price of a hotel room goes up $5 because of inflation, you're probably still going to pay that. And so inflation by and large can be beneficial for a company like this. People either pay the extra 10% that the price of the hotel has gone up by, or they don't go on holiday. They can downgrade, but in terms of Booking.com, that means they'd just be earning what they were before. So I do think they are really relatively well positioned now that the world, of course, is open, to continue to take advantage of that rise in terms of global wealth, in terms of wages, and the willingness of people to continue to spend what it takes to have a holiday of the standard that they perceive to be their standard, right? Like if you used to go to a 5-star hotel and now you go on holiday, you're probably going to pay what it costs to get a 5-star hotel, and the same for a 4-star, 3-star, right? And so they benefit from the increased costs associated with holidays nowadays. Now, you can see in terms of the year-on-year metrics, there is an expectation that we see rampant growth over the coming years. 152 turns to 182 for last year, then 207, 240, 289. So there's real significant expectations here for the growth of both earnings and revenues for Booking Holdings. And then in terms of their performance versus expectations, yet another company that continues to just outperform time and time again. Every quarter they beat market expectations. This time it's 36.03 for the EPS and 5.18 billion on the revenues. So we're looking at a company that, if you look at previous occasions, that would make you think that they're likely to outperform expectations once again. And then if we look at the share price, we can see that it's once again, much like Walmart, the kind of company where you're getting into an almighty trend here. So this is the ramp up that we've seen over the course of 2023 and 2024. If we're kicking off here in 23 and we're ending in 24, well, even if we had that pullback, that's 132% in 2 years. And that pullback is now being bought in a big way. You can see that this retracement is sort of lower highs, lower lows. Now we've broken up through that first swing high. That signals that the retracement is likely over and that the bulls are back in charge. What's happened over previous earnings reports? Well, we've seen this earnings report here, big gap high, and it continued to push. So we didn't close the gap. On this occasion, we saw the pullback and then it recovered over the course of the next month. Actually, the next 2 weeks. On this occasion, gapped higher and then pushed higher. On this occasion, we gapped lower, and then we had a fair amount of chop for the next few months, and then we ultimately resolved towards the upside. So it's been more mixed compared to the likes of Walmart, certainly. But you're looking at a company that is expected to outperform earnings per share and revenues. If you look at what they've done in the past, it has an almighty trend behind it. And it's a company that managed to take advantage of higher inflation, because higher inflation generally means higher wages. It generally means people are willing to spend more on these hotels and products. And it just means more significant margins and income for this business going forward. So when you're seeing US inflation coming in above expectations, it's bad for some companies. I wouldn't necessarily say it's hugely detrimental to businesses like Booking Holdings. So Three really interesting stocks for the week ahead. I hope this has been useful for you guys as you look to potentially trade it. You might trade into it, you might trade after it, you might not trade it at all. But certainly different ways to approach these. But I think they're three really interesting companies. And despite the lack in terms of volume of significant companies that you might want to trade around earnings for the coming week, in terms of the quality of them, I think this is a really great week for the week ahead. Thanks a lot, guys.